We're in front of Phil's Coffee in downtown San Francisco, south of Market. We're going to talk to one of two brothers who started a mortgage company at the very top of the market. And guess what? They're still here. Quite a success story. From KCBS, All News 740 and FM 1069 and CBS Interactive, this is Homegrown CEO. Hi, Evan Stone. You're the founder and CEO of Pacific Union Financial, and it's nice to talk to you.
Thanks for having me. Good to be here.
You started your company with your brother back in 2004, and everything in the real estate market was going pretty well then, right?
Yeah, 2004 was a bumper crop of mortgages. So obviously, being in the industry at that time was hugely profitable for anyone that was either in it or tangent to it. So good time to start.
So you guys got started and things were good and business is great, and then things got tough for everyone. As entrepreneurs, what did you and your brother do to kind of navigate through those really choppy waters of, I'm thinking 05 and 06 are probably the worst, right?
Well, actually 2007, 2008 were the worst of the crisis, and initially we didn't do anything, and that was definitely a problem. We were young, still are young, had a lot to learn, figured things would just bounce back. But after some time, it became clear that things were much worse than we initially anticipated. And we had to make some real tough changes, had to make some real tough decisions. And that was the first time in my career as an entrepreneur that I had to lay off over half my staff, that we had to make some real tough calls that impacted a lot of people. But at the end of the day, it was about the business surviving. We got through those times, and here we are today.
You know, people that run a donut shop could take the same lesson as you did. The economy went bad, people lost work, people weren't spending money. You probably needed to step back a couple of times and say, well, wait a minute, we need to rethink how we do everything.
We did. We absolutely had to. I mean, ultimately, you can only control what you can control. And we couldn't control how much money was coming in, but we certainly had to control how much money was going out. And so from that standpoint, like I said, we made some real tough decisions, had to cut staff. I'm real happy and fortunate to say that now we're as big as we've ever been, much larger than we've ever been. But during those times, we had to take a whole different approach. We had to operate lean and mean. We had to take a whole different approach with the way that we did business, that no longer could we afford just to do business as usual. We had to take a whole different approach, look at the different channels with which we could drive business and make some real changes and take some real risks. It was either this works or we're in real trouble. But the one thing we knew that was not working was the way we'd been doing it before. So we rolled up our sleeves, we got to work. We made some real tough changes, and fortunately, we've come out on the other side much better.
Nice. So you're headquartered in Walnut Creek now, and you've got a couple hundred employees. So you've not only survived, but you've thrived. We're finally starting to feel like things are turning the corner a little bit, and you feel that way too, right?
No question. I've always been kind of a contrarian thinker, and when things are tough, that's when I believe that there's opportunity. And so we've accumulated production platforms. We've gone out there, done some merger acquisition work, and we've grown in these tough times, and we're I think better off for it. With that being said, as far as the market goes, my personal opinion is that the market is much more robust today than it was 3 years ago. That housing values seem to be much more stable than they were 3 years ago. Definitely from a financing standpoint, I know there's a lot of rumor and propaganda out there that there aren't loans available. The reality is that there are loans available. You have to qualify for these loans. It's more difficult today to qualify for a mortgage loan than it was 4 years ago. But with that being said, people that can document their income, people that have shown good payment history on their credit profile, these are people that are going to qualify for mortgages. So,
hey, guess what? It's just like it was pre-boom. You have to have a job. You have to prove you can pay your bills. That's just called having good credit and being a responsible buyer.
That's right. I mean, the saying goes, the more things change, the more things stay the same. And throughout all these changes, we've kind of reverted back to a time where underwriting was more conservative, that if you deserve to qualify for a loan, you do. That there's not crazy exotic loans that are being made anymore, that it's much more vanilla, much more down the middle. But if you fit into that box, and the box is not that small, but you had to have made your payments on most, if not all, of your trade lines, and you have to be able to prove some income. And I know for people that are self-employed, that can be tricky. but wage earners make what they make. When there were stated income loans out there and you were a wage earner, we call that a liar loan, because why can't you show us your W-2s? Why can't you show us your pay stubs? Now we've gone back to, I think, a more responsible way of underwriting, and I'm all in favor of it.
Working with your brother, what's the dynamic of working with a family member?
Well, first and foremost, I love him and trust him unequivocally. Sure. So from that standpoint, it's been fantastic. I started the company on my own in 2004, and I think very few CEOs have someone that they can trust completely and without hesitation in their business. I have that in Dave. So it's really been fantastic. I live both in Northern and Southern California. We have a huge presence in Orange County. So I don't get to see him all that often. So when I do, it's been great. We talk every day over the phone. Ultimately, the decisions lie with me, but he helps me to form those decisions. And he's a real bright guy. He works hard. He has his eye on the ball. And for me, it's really been a huge help in growing the business.
So we're out in front of Phil's, a couple of blocks from AT&T Park. Giants baseball is happening today. I love this neighborhood on game day. It's really vibrant and people out everywhere. Very positive and hopeful for the Giants, are you?
I am. My brother and I actually went to the World Series last year, both in San Francisco, and flew out to Texas for those games. And it's going to be tough to repeat, but we have all the hope that they'll do as well, if not better than they did last year.
Evan Stone, thank you very much. It was nice talking with you, and go Giants.
Go Giants. Thanks for having me.
You can find out more about Evan and Dave's company at pacuniondirect.com. That's PACuniondirect.com. We'll have another new episode, another local entrepreneur next week. I hope you'll join us then. From CBS Interactive and KCBS All News 740 and FM 106.9, I'm John Scott. This is Homegrown CEO.